Okay, so let's get the session started, right? At any point in time, if you guys have any questions you would like to clarify, please just put them under the questions chat. I have both the chat box as well as the Q&A box open. Okay, so if you have anything, right, any questions, just put them there. So just a quick introduction of myself. I'm Lee Sing. I provide FX advisory to institutional clients. I'm also part of the team that's recognized by the Technical Analyst Awards as finalists for the best FX research. If you guys are watching this live with us right now, right, please put your questions under the questions chat. If not, right, please feel free to reach out to me on LinkedIn if you have any questions on the sessions. So with regards to, before we get the session kick started, right, so the information presented here, it's not to be treated as investment advice. It's for educational purposes only. So this is the agenda that we will be covering for today. First, we will take a look at how we can incorporate market structures. So for this, I will cover a bit more on the different type of market structures that are in the market. And then at the same time, right, we will take a look at the different Fibonacci extension levels and how we can use them to find support zones for our trading. So the next thing would be on looking at the different types of zigzag patterns, right? So mainly for Fibonacci extension used to find support levels, we have two different types of zigzag patterns that we look at. So for this specific session, we will also hop on to TradingView to practice the zigzag patterns, right? So we will take a look at how we can actually apply these concepts onto our charts. And then finally, right, we will take a look at the key extension levels that we can use for potential entries in terms of stop losses and take profit targets. In these examples, I will also combine a bit on the Fibonacci retracement levels that were covered, right? So these concepts that were covered in earlier sessions. So we can take a look at how they can all come together. Okay, so just a brief introduction on Fibonacci extension. So what exactly is Fibonacci extension, how it works, right? So Fibonacci extension itself, it's actually a technical analysis tool, right? So this is helpful to find both support and resistance levels. So this session itself is a 30-minute session. It will be split into, for today, we will focus mainly on using Fibonacci extension to find support. Okay, so even though we will have both the support and resistance levels covered, in this specific series, in this specific session, right, we're focusing only on how we can use Fibonacci extension to find support. So in this case, right, when this happens, we also want to ensure that after the session, you guys are extremely clear as to how you can actually use this Fibonacci extension tool and how we can use it to find support levels. In the next session, right, we will be focusing more on the resistance. So the session itself, we're just focusing on the support. Okay, so in terms of looking at a Fibonacci extension, the most important thing that we need to find, right, looking at this extension levels is to take a look at the highs and lows of price movement in the market. The reason why we want to only take a look at the highs and lows, and this have to be significant points. So what I mean by this is that if we take a look at the charts later, right, you want to identify points where there are huge wow swings, right? So for example, something like that, you can see that this itself would be a significant high. This is a significant low, right? And this is a significant high. But if you have price moving, let's say something like this, right? Like this high that we have over here, we are not seeing a huge reaction of this high, which is the reason why, even though it can be classified as a high, right, this is not a significant price action. So in such cases, right, when we identify Fibonacci extension, as much as possible, we try and find significant high and low points. Okay, so this is on Fibonacci extension. The next thing that we want to cover on Fibonacci extension would be basically how this tool itself, right, it's based off a Fibonacci sequence. So Fibonacci sequence is just a series of numbers that follow a specific mathematical pattern. You don't have to be you don't have to know how to calculate the Fibonacci extension, right? So essentially on TradingView, there is a chart, there's a tool that allows you to project, that actually shows these levels, right? So we're able to project this extension levels. So the most important thing on Fibonacci extension, and I would say that the main difference between the extension and retracement, which we covered in earlier sessions, is that for extension itself, they are a zigzag pattern. So zigzag patterns that actually look like this or patterns that look like that. Right, so these are the two patterns that we will be focusing on for this session. The reason why it's important to identify this pattern, it's because we need to use this turning point, right? So all the turning points that we have over here, these turning points would be used to project our extension level. So I'll go deeper and into deeper details as to how we project these levels, but just understand for now that when we talk about zigzag patterns, The reason why we are focused on zigzag patterns is because we need to use the turning points of the zigzag pattern in order to project these levels. So when we take a look at price charts, right, we want to look for significant highs and lows. So this we have covered. So this would form our patterns. At the same time, right, of course, we want to keep in mind market structures. We want to keep in mind if there are any trend lines. So if market is in a downtrend, forming your lower lows and lower highs, right, in this case, the overall trend is downwards. We want to look for positions to sell coming into, let's say, a resistance level. Then in this case, right, in this zigzag patterns, you can also use this zigzag patterns to project resistance or to project areas that you can sell, right? So if market is in an uptrend, it's the same thing, right? So we're trying to find support levels that we can buy from. So in such cases, we want to look for zigzag patterns to project the support levels. So apart from just market structures, right, other important points that we want to highlight would be taking a look at, for example, your other indicators, right? So it can be things like your moving averages, right? Trend lines, or even just horizontal support resistance levels. So horizontal support resistance levels, right? That in this case, because we're only focusing on support levels, I will just highlight 3 types of support levels that we try and look out for. Right, so for support levels, there are 3 different kinds. You can see them across different charts, right? So this would be the swing low support. Essentially, you see that there is a huge reaction of this level once, and the price came into this level again. And right now we have buyers basically entering into this session, right? And then pushing prices higher. A break of the neckline would also be our chart pattern, right? Which is the double bottom. Okay, so this is the first type of support level. The other kind of support level, it's basically one that faces resistance previously, and then we saw a strong break above this level, right? So for those of you guys who are using breakout trading strategies, right, waiting for a break of the trading range and then a pullback into this zone, right, this area itself would then serve as a support before continuing on the upside. On this break of this resistance level, right, if you take a look at it in terms of market structures, right, this idea itself, you can see that it's basically a break of the last high. Okay, so this is a summary of what Fibonacci extension is, right, before we hop on to practice them. So when I when I highlight market structures, right, there are 3 types of market structures. So one is in an uptrend where prices form successive higher lows and higher highs. So this is how it looks like, right? If you switch it to line chart, you can see that this would be the example on the left. On the right, right, it's an example of a chart that's taken on trading view, right? So if you have some trouble with identifying this significant price movement, right, what you can also do is just highlight. So you can either switch it to line chart or just take a look at this at a glance, right, and highlight this significant point. So essentially this high, right, where we saw this huge reversals. So this area, right, this will be 1. So all these highs are marked out in this blue and gray dots. Okay, so this is for an uptrend. The reason why it's important is that in an uptrend, the assumption is that on this pullback, right, this pullback itself would be the buying opportunities, right? So you can see that when prices are in an uptrend, the lows are not violated, whereas the highs are constantly being violated. But this also suggests is that if price pulls back, the assumption is that if price comes into a demand area, we're expecting price to continue its trend unless there is a change in market structure. So this, it's going to be important, right, going forward in terms of how we do our analysis. So for a downtrend, right, this would be the opposite, right? So for a downtrend, prices are forming successive lower lows and lower highs as seen over here. And this is an example on the chart. You can see again significant lower lows and lower highs. Any pullback into this resistance areas can present selling opportunities. And then next would be in a range, right? So in a range, markets are moving sideways. In this case, you can see that a support and resistance level, it's being respected, right? So price coming in to test these levels as a resistance. Essentially, you have sellers coming in to push prices lower and support levels here as well. So in a range, right, you can do 2 types of trading strategy. One would be a straddle, right? So straddle would be basically selling at a resistance and buying at a support level, right? This is one, but we do have to be careful of liquidity sweeps. So what this also means is that at these levels, right, at the support and resistance levels, there are a lot of orders that are lying just slightly above and below these levels. This can be in a form of stop losses or sell or buy stops. So if you open a buy position at the support level, stop losses will be put just slightly below this level. Likewise, right, if you're trying to sell over here, right, sell your stop losses, which are essentially buy orders, will be lying slightly above. For breakout traders, right, they will also have their buy stops above here and sell stops below, essentially waiting for price to break below it and then have the sell stops triggered to play the move down. So this is again an example of support resistance level, right? So again, in these ranges, right, if we want to play a breakout, it's best to wait for a break above and a close above it before continuation to the upside. Okay, I have a few questions, right? let's see, right? So why are there specific patterns generated in trading? What are driving these specific patterns and why Fibonacci can predict these patterns? So in general, patterns are formed, right, based on market psychology, right? So the support resistance levels, they are nothing but a reflection of the market participants' psychology, right? So in this case, you can see that at this support level, what this means is that at a certain price, right? This price itself, it's in an area where it's discounted, right? Essentially, you have people who are buying in to come and push price higher. So if you have your initial market participant, right, missing out on this initial move up, when price comes back into this region again, right, it can entice sellers to enter their positions, right, essentially to put a buy because they missed out on this initial move. That's one, right? At the same time, people who got in on this move itself might have shifted their break even, right? So they shift their stop loss up to break even, essentially protecting their profit so that if price goes against them, then in this case, they want to close out those positions. So what this translates to over here is that you have buy orders coming in based on just support resistance, right? So people who are trading based on support resistance, there'll be buy orders coming into this region. At the same time, right, you have also people who are actually moving their position to break even. So in this case, right, this is what push prices higher. And then in terms of market movement, there is also impulsive move and corrective move. So impulsive move, it's basically one where you can see a strong movement in the direction of the trend, whereas corrective waves itself, right, this is your pullback. So on this pullback itself, right, it's actually presenting opportunities to enter into the trend. Okay. Okay, and then Masood, I'm sorry, I can't understand French, right? So if you have any questions as well, right, just put them there. Okay, so yeah, I have the chat box open. So if you guys have any questions, just place them there. Okay, so let's take a look at the next slide, right, which is on Fibonacci extension. So now that we have covered market structure, it's important to understand how we can actually integrate market structures and Fibonacci extension. So for market structure, right, so recall that when prices are in an uptrend, we are expecting this uptrend to continue, right? So if prices form your higher lows and higher highs, the expectation or the idea is that the assumption is that when price comes into a demand area over here, we're expecting this uptrend to continue, right? Because this is the last low that we have that broke the high. So you can see that if the uptrend is to continue, the low should not be violated. So if price pulls back into a demand area, right, this is opportunity for us to enter a long position. So take a look at this chart example that we have. You can see over here, right, so what we have essentially, it's first, right, we want to identify the overall direction of the trend. You can see that this is an uptrend. Prices are forming subsequent higher lows and higher highs. So just mark out the significant points, right, successive higher lows and higher highs. So this is in an uptrend. There is a break of structure that's formed. So break of structure, it's formed essentially when there is a break of the last high in the uptrend. So this would be a break of structure, and then this is the last high, price broke above it, right? So this is the break of structure. You can see that in terms of market movements, if I were to mark out the overall market movement, price pushed up, pull back, pushed up, pull back, push up, right? So you can see that this is the low that broke the high. So this low should not be violated if the uptrend is to continue. So once we've identified the overall direction of the trend, the next thing that we want to do is to highlight our Fibonacci extension level. So for Fibonacci extensions, they are basically zigzag patterns, right? So recall that we have this zigzag pattern and this zigzag pattern. So these are the two types of zigzag pattern that you want to look at in trying to identify Fibonacci extension for support. Okay, so we're trying to find Fibonacci extension for support levels. So in this case, you can see that this would be the zigzag pattern. So this example that we have corresponds more to the first kind of pattern here, right? So you can see that this is the first kind, right? So this is the zigzag pattern. I've drawn it here. So once we've identified the zigzag pattern, the next thing that we want to do is to highlight the turning points. So for turning points, right, what we want to highlight would be the 3 turning points, because the turning points are the ones that we will be using to project the extension level. So what you can do, right, so for this, let me go on to trading view so that I can show you how we actually get this extension level. But the idea is that basically, right, you want to identify the first point. So this will be the first point, your starting point. This would be the second point, and this would be the third point. So once you have this, right, use the Fibonacci extension tool, you can see that there will be levels over here, right? So these are levels that are being built into the tool. So let me just use an example. So in this case, you can see here, right? Let me just bring up our trading view chart. me just clear these drawings. Okay, so let's take a look at this example. So you can see that this is the zigzag pattern, right? So these are the points that we want to use for our extension. So point 1, point 2, and point 3. So once we have this extension level, right, how you can actually find extension, it's by taking this tool. You can see trend-based Fibonacci extension. Right, and I turn on the magnet mode because I want to be able to capture the highest and lowest point without having to squint my eyes, right? So basically by hovering over this candle, it automatically highlights the high and the lows. So this is the highest point, this is my second point, and this is my third point. So if you've turned on the default levels, right, these are all the default levels over here, right? So these are built in, right? So these are actually the common levels that I use, right? So the 61.8 extension, the 78.6, the 100%, and the 1.272. So these are the 4 common ratios that I use over here, right? So just sharing with you guys. And the 100% extension, what this means is that basically, right, so for 100%, it just means that the price movement from point 1 to point 2, this range over here, would be the same as the price movement, right, from point 3 to the ending point. Okay, so if it's 100%, it just means that this price movement, this range from point 1 to point 2 is the same as from point 3 to the lowest point. So these are the different extension levels. So you might ask, right, so now that I'm given all this extension level, how would I know which is the one to use, right? So how would I know whether the 61.8 is going to be the one, or the 78.6 or 100 or so on and so forth, right? So how you can know that this is extension. So everything about trading, it's about probability, right? Trying to get this higher probable setups. So in this case, right, you can see that apart from just using extension levels in isolation, right? So I'm not going to be taking every extension level and just taking trades off these levels. But rather what you want to do is that apart from just the extension levels, you also want to identify support and resistance levels, right? So in this example, right, so recall that in the earlier part of the session, we talked about 2 different types of support levels, right? The swing low, that's one. And the other type of support level, it's basically resistance turns support level. So these are the 2 types that I've went through earlier in the session. So you can see that in this case, right, this is actually the second type of support level. How so? You can see price coming in to face this as a resistance, broke above it, retested this level again as a support, right? So you can see how if I were to just draw it in a different shade, basically price facing the resistance, broke above it, tested as support, continued on to the upside. So this, right, price coming in to face it as a resistance and then a support level. So you have a combination, right? In this example alone, you can see how these concepts, right, come together, the idea of support resistance levels, and then also looking at zigzag patterns. So this is the zigzag pattern that we have highlighted, right? So this pattern over here. And once you have found the zigzag pattern, you can actually use this zigzag pattern to project the extension levels. So as much as possible, I try and find extension levels that are in line with this graphical levels. So this level itself, right? So what you want to do first is just open a blank chart, highlight support resistance zones that you have. And once you have highlighted these levels, right, you can see if there are any zigzag patterns that you can identify, right? So this is one zigzag pattern that you can identify and see if there are any extension levels, right? And this example will be the 61.8, but it can be any other levels, right? So try and see if there are any levels that line up here. So in this example, right, this is not the only zigzag pattern that we have. There are other zigzag patterns that are available as well. You can see that this would be another one. Okay, so what is important about this zigzag pattern, it's that throughout the session, right, you want to see that this movements itself, there are significant price movements. So if I were to just trace it out, right, you can see that these are significant movements, right? They are not small movements like something like this, right? So this itself would not be considered a valid zigzag pattern because price over here, the movement is too small. Okay, so you want to see significant movements. Another way would be to turn it into line chart. So if you switch it into line chart, you can see again, right? This is one move. You can consider this as one move. And then this as well. And finally, the one that we have went through. Okay, so these are the zigzag patterns that you can take a look at and also project these levels. Okay, so this is on Fibonacci extension. This is the first type of zigzag pattern that we have, right? Let's move on to the second kind of zigzag pattern. So the second kind that we have would be this area here, right? So you can see that again, right? In terms of looking at Fibonacci extension, the most important thing is identifying the general direction of the trend. the general direction of the trend comes from market structures, right? So if prices are forming higher lows and higher highs, we know that it's an uptrend. So in this case, right, the first thing to do is always to look at a break-even structure. If there is a break above the last high, right, that shows that prices are potentially in an uptrend. Once you have identified the direction, the next thing you want to do is that you want to look for a buying opportunity in an uptrend. So you identify support resistance levels. So there are a few support resistance levels you can identify. This is one, right, the lowest point. This is one. And this is another one over here, right? So this is based, if you guys are looking at just specific supply demand areas, based on specific candles, you can see that this would be another candle, right, based on demand zones. So I covered on supply resistance, supply and demand zones in a previous session, right? So you guys can take a look at the recordings for that. In this case, you can see that this is again a demand area, right? So this is the zigzag pattern that we have found over here. So again, what you want to do, take these 3 points. So this is the first point, the second point, and the third point. And you can see that open up this key extension levels, right? There'll be a few levels over here. In this case, the one that lines up with this support zone itself is the 100% extension. You can see this area, right? So if there is an extension level and also a support area, and this the direction of the trend itself, it's in your favor, right? In this case, then it gives a higher probability setup. Of course, there's always a chance that price could just continue much lower from here, right? So which is why you want to identify first the market structure. Once you've identified that, take a look at this significant swing points, right? Support resistance areas, and then finally the third step will be taking a look at zigzag patterns. Okay, so this would be the second kind of extension level that we have here. And then finally, right, the other kind of extension level that we have, this is the final zigzag pattern. So you can see this area over here. So in this case, right, again, what is common throughout these examples, it's that you can see there is always a break in structure first that's being identified. Once we found this area, you can see what happens following, right? The break in structure, this overall position, it's our overall trend itself. It's bullish. And you can see that you can identify support resistance level. So this is the first step. The second step is looking at support resistance levels. So ask yourself if there are any kind of trend line support resistance levels, right? In this example, there's also an ascending trend line that can be drawn here. So let me just see, right? So there's an ascending trend line that you can also draw here. You can see for a trend line to be valid, right, we need at least 3 taps. So you can see price coming into this region. Oops, right? So price coming in to test this area here, right? And then this support level itself also lines up with the ascending trend line. And then finally, right, the third step, which is to identify significant swing points. So you can see that significant price movement. This would be the zigzag pattern here. So this would be the first point. The second point that you can take as your Fibonacci extension, and the third point, right? And once you have these 3 points, again, just open up the key levels. And in this example, the 127.2% lines up there. Okay, so these are the 3 steps that you want to take in trying to find Fibonacci extension. Again, right, it's important that you don't just take them in isolation, right? So the next thing that we want to do is to go on to TradingView and practice how we can identify valid Fibonacci extensions. So for this, right, let me hop onto the TradingView chart to explain a little bit more on how we can use them. So let me just clear all these drawings. Okay, so when you're drawing your Fibonacci extension levels, right, in this example, you can see that we drew this 3 points, right? So our first point, second point, and third point. What you want to check, right, in ensuring that your Fibonacci extension is valid is that so this is the highest point, right, which is also the final point that we ended this Fibonacci extension. So you need to check that to the right of this point. So let me just put a marker here, right? So this is the point, the highest point. So you need to check that to the right of this point, which is essentially from anywhere from here onwards, price did not break this high. The reason why it's important is because if price broke this area, right, price forms a new high, then this extension level that was taken, this itself, right, is no longer valid because the high, it's this ending point itself, it's not at the highest point. Okay, so this is the most important thing in checking your Fibonacci extension, right? So once you have identified the zigzag pattern, you need to make sure that the last point, right, which is your ending point, prices form to the right of the ending point, it's not broken. Okay, so this is actually a valid extension level. The reason for that is because you can see that to the right of it, right, price have not formed a new high. So this area still holds, right? So the support region still holds. So Let's take a look at another example where it's no longer valid. So for example, if I have a Fibonacci extension that is taken here, let me just delete this, right? So let's assume that there is a Fibonacci extension that it's taken here. So this area. So this is the zigzag pattern, right? So this area over here. Okay, so assuming that you're at this high right now. So having identified the zigzag pattern, what we can do next, right, would be to take these 3 points. So these 3 points would be the turning points and try and project an extension level. So this would be the resistance and support level. You can see here, this area. So assuming that you're trying to find support level, right? So if I were to do a playback, this would be the playback area, right? So let's say you're somewhere here in time. We have, number one, identified the market structure, right? Prices are in an uptrend. Why? Because of the break of the last high. So there's a break in market structure. So this is one, so it's in a bullish trend, right? And we're trying to look for pullback to play the long position. The second step would be to take a look at support resistance level. So in this case, this would be the second step, right? You can see that price broke this resistance level. This was a previous huge level where we saw a significant rejection of this level. So this would be a potential support level. So once you have identified this, the third step would be to take a look at zigzag pattern. So this would be the zigzag pattern. And once you've identified the zigzag pattern, right, what we can do is to take our Fibonacci extension tool. This is 0.1, this is 0.2, and this is 0.3. So in this example, you can see that the most relevant Fibonacci extension would be the 78.6 because this area itself, right, this level is in line with the blue zone that we have highlighted. So in this case, right, once you have identified this is the 78.6 extension. So once you found this level, the next thing that you want to do, right, it's to wait for price to enter this region. So let's play back slightly, right? I mean, play forward. Okay. Now what we have here is that recall that this is the last point that we have that was being highlighted for the pullback, following which what happens is that price to the right of this highest point, right, which is the ending point that we use to project this 78.6. To the right of this area, price broke the high, right, represented by this bullish move. So what this means is that if you were to still find this extension level, right, if this level, we're trying to find if there are any Fibonacci extension that it's in line with this zone, this extension that I have, it's no longer valid. Why? Because price broke this high, right? So price broke this high that we have. So what I need to do next, it's to find again the highest point. So where is the new zigzag pattern that's being formed? This is the new zigzag pattern that's being formed, right? This area here. So as price moves, right, if it forms a new high, what you need to do is to take a Fibonacci extension, the same concept that we've applied previously, right? But just shift your last point to the highest point. And then again, check for the same thing, right? If there are any extension levels that line up in this zone. So in this example, right, it will be the 1.272, this area here, right? And I'll delete the old extension because it's no longer valid. Okay, so one thing about Fibonacci extensions is that if you're monitoring price movements, you need to ensure that the highest point, right, where price pulls back, the highest point itself, it's not broken. Okay, so I hope that this is clear. So this is important in using Fibonacci extension, right? So we have covered two different types of Fibonacci extension zigzag patterns, right? The first one is this, where you take again these 3 turning points to project the extension level. And the second type of extension level, it's something like that, right? So again, take these 3 turning points and you can project these extension levels. Do not treat them in isolation, right? You want to ensure that they are in line with a support level, right? Or support or demand zone, okay? Okay, so this is a summary of what we've covered so far, right? So for today, we are focusing mainly on using Fibonacci extension to find support. In next week's session, right, we will be continuing with the series, taking a look at more examples and also how we can combine them, right, with Fibonacci retracements. Okay, so in this example, right, we saw how we can combine market structures and Fibonacci extension to find support zones, right? So we went through 3 steps as to how we can identify them. The first step, it's basically taking a look at the market structure if prices are in an uptrend or downtrend. Second step is looking at support levels, right? Trying to highlight support levels. There are 2 types of support levels that we have. One would be the support level here, right? The swing low, where we saw this formation of a double bottom with the break of the neckline. The other type of support level would be resistance turn support levels, right? So price testing this resistance, breaking above it, retesting this as a support. The third kind of support level that we have, the third step will be trying to find zigzag patterns. So there are 2 kinds of zigzag patterns for Fibonacci extensions. So zigzag patterns we have covered, right? 2 different kind of zigzag pattern that you want to keep a lookout for. And these are the 2 zigzag patterns that we have. right? So this are the two zigzag patterns here. Let me just, oops. Okay, so these are the two zigzag patterns. And then finally, right, what we have also covered, right? So this is on key extension levels for potential entry, stop losses, and take profit targets. Again, right, these levels itself, the common ones that I look at would be the 61.8 extension. Maybe for this, let me just switch it to trading view so that it's easier, right? So these are the common ones that I use, right? So you can, again, don't take them in isolation. Try and see if there are any key levels that are in line with this extension, right? Support resistance zones. But these are the common extension levels, right? 61.8, 78.6, 100, and 1.272. There's another one as well, 1.618, but I generally don't use anything beyond that. Okay, so I hope that this session has been helpful, right? If you guys have any questions as well, right, please do put them under the questions chat. Okay, so I'll just give it a few minutes. Right, so if you guys have any questions on Fibonacci extension, if there's any part of the session that isn't clear, right, please put your questions under the questions chat. I have both the chat box and Q&A box open. Right, so if you have any questions, please feel free to put them there. Okay, so at the same time, right, I also want to show you, for those of you guys who are asking for the webinars, right? So the webinar schedule, you can actually find them here. So it's the same place that we've covered so far, right? So just go to vantagemarkets.com, and under this area, right, just education and tools, education and tools, educational webinars, you can take a look at the different speakers as well as the schedule, right? So we have webinars on a daily basis. Wednesdays would be our live analysis session, right? Fridays as well. Thursdays are our educational sessions, right? We have Mondays market outlook as well as Tuesday sessions. So live trading sessions and specific topics. Okay. Okay, so I see that we have no other questions, right? So if we have no other questions, right, that's all that we have for today for the Fibonacci extension. For next week, we will be taking a look at examples on how we can use them as well, right, combined with Fibonacci retracement. So if you guys want a recording of it, right, they will be posted on Vantage YouTube page. Okay, so with that, we have come to the end of the session, right? So thanks, everyone. I hope this session has been helpful. Thanks for staying with us till the end, right? You guys are awesome. Have a great day, and we will catch you guys again soon. Okay, sorry, I have a question, right? Dollar yen. Okay, let's take a look at dollar yen. Okay, so just before moving on to this, right, let's take a look at dollar yen. So for dollar yen, right, I'll just bring up the chart. Okay, so let's take a look at dollar yen. So again, right, using Fibonacci extensions, retracements, right, how we can actually apply all of this. So let me just take a look at that. Okay. Right, let's see dollar yen. Right, so first, so again, right, let me just remove all this drawing. So you want to identify the higher time frame. So in this case, you can see that prices are in an uptrend. It's currently pulling back. If you take a look at it in terms of how we can apply extension levels, you can see that this is the zigzag pattern, right, over here. So you can see this area. Okay, this is the picture on the monthly as well. It's lying on the resistance and support area, right, coming into this region. How you can identify the extension level. This is the zigzag pattern. So you take again 3 points, right? So 127, it's broken. The next level that I shared earlier, right, 1.618. So usually it doesn't go beyond this area, right? So if price goes beyond it, right, this is the level. So 1.618. If you go down to the weekly, we can see that on the weekly time frame, it's still showing you bearish market structure. Right, so lower lows, lower highs. Even if you're on the daily time frame, you can see the most recent move, right? Just take a look at the significant price points. If I switch it to line chart, just highlight the significant price movements. So this is the high, this is the low. So what this shows is that it's still forming lower lows and lower highs coming into this area. This is the picture on the daily, right? So what you can do here, right, it's the same thing, right? Identifying Fibonacci extension levels. So in terms of trying to find support level, you can see that it's the last zigzag pattern over here. right? So this is the second type of zigzag pattern that we discussed, and these are the 3 points that we want to take the Fibonacci extension from. So this is point 1. So again, highlighting this point 1, point 2, point 3. So this, I'll open up this extension levels. So you can see that these are the 3 extension levels over here, right? So the ones that line up with the higher time frame would be this area here. You can see the 78.6. I'll put this in a different color so that we can see them clearer, right? The 78.6 as well as the 100% extension. Okay, so this is the area, right? So currently over here, you can see that where the last high is, the last high that broke the low. So you can see that this is a break in structure. There's a break of the last low. And then this would be the last high that took out the low. So on dollar yen, right, if we are seeing any reversal from here, the break of the daily high, which is this high, this is the last high that caused the break in structure. This would confirm a change in the direction of the trend. Right now, dollar yen itself, right, it's also because of FOMC. You can see that FOMC delivered a 25 basis point. I mean, Fed delivered a 25 basis point rate hike yesterday, right? So there is also expectations of a softer landing, right, with easing inflation data. Okay, so this area itself, right, it's also partly caused by dollar weakness. Right, hi Asad, right, nice to meet you. You're from Pakistan. Great meeting you, right? So I'm from Singapore. Okay, so yeah, and euro dollar, right? I have another question on euro dollar. So let's take a look at euro dollar. Okay, so again, you want to highlight these levels. Let me just remove all these drawings. You can see again, just looking at structure, right? On the weekly, on the daily. So on the weekly, it's just pushing into an area, right? Is there any support resistance levels at this area itself, right? For me, this would be the region. Looking at just specific candles, you can see that this is the area. If you take a look at it on the daily, right? On daily, the most recent move, or even on the 4 hours, you can see that it's still, again, bullish market structure. Also partly driven by Fed yesterday, right? So prices are still forming higher lows and higher highs. So this is the last support area over here. You can see that this was the previous resistance turn support area. How so, right? Price coming in to test this area as the support, breaking below it, hesitating over here as a resistance before it broke above. So this is the area and this is the zigzag pattern. So this is the most recent zigzag pattern, assuming that we do see a pullback here. So having identified the zigzag pattern, right, these are the 3 points that you want to project the extension level from. So once you have this, right, so this is point 1, point 2, and point 3. So again, open up the key extension level. So these are all the levels that we have. Right, and another one is the 1.272. So these are the levels, right? So the common ones would be 78.600, 1.272, 61, right? This one, I use it if it extends too far out, right? But if not, usually this would be the 4 levels that I showed earlier, right? So this 3, this is the 5th one, right? But yeah, this would be the common one. So in this case, you can see that the 127.2 is the one that lines up with the support, right? So I'll remove the rest of the levels so that we're clearer. Yeah, so this is the region to watch for support, right, on the 4 hours. Okay, so yeah, with that, we have answered all of the questions, right? So I hope that this session has been helpful. Okay, yeah, I see that we have no other questions coming in as well, right? So that's great. Then yeah, thanks everyone, right? It's been a really great session, right? Thanks for being so interactive, right? That's our aim, to keep the session as interactive as possible. If you guys have any other questions, right, please feel free to put them under the questions chat, right? If not, we have come to the end of the session, right? So thanks for staying with us and have a great day, and we'll catch you guys again tomorrow.